Welcome back, everyone, to the BizBeat by SVA, where we simplify what business owners need to know about taxes, accounting, and the changing financial landscape. I'm your host, Lee Schwartz, Director of Business Development and Sales here at SVA Certified Public Accountants, and joined as always by Eric Trost, our tax principal, and also our firm's president. Eric, I got to apologize to everybody. First and foremost, obviously, my annoying voice is even more annoying. So my apologies to everybody. But hey, it's Thanksgiving week. Eric, your number one Thanksgiving side, what is it?
I think it's more turkey.
Oh,
So I like a helping of turkey with probably more turkey and then potatoes um, covered in gravy. Like
just
a whole, like
just
give me the
all
gravy
turkey
boat,
gravy.
right? Yeah.
Yeah,
And
I
then I,
like
I, I tend to leave the cranberries and the stuffing and the three bean pudding, all that for everyone else.
Yeah, so you it's really like the old school. You like the meat and the potatoes.
Pretty much. Yes.
Okay,
It's my
that
thing.
doesn't surprise me at all. It really
No,
doesn't. Are you
I
all right?
don't have a varied diet.
Okay, are you a baked or a fried turkey fan?
We bake our turkey.
Okay,
I'm pretty sure. I'm not actually involved in the cooking process.
just the eating.
I do a lot of the eating,
Okay, good
and
for
I
you.
make sure the TV is tuned to the football during
All
the,
right,
the
so
course of the day.
it's a team effort.
Yes,
Okay, yeah, yeah.
everyone's got to do their part.
All right, sounds good. Well, as a reminder to everyone, as always, if you're tracking updates on the One Big Beautiful Bill Act and changes that are happening, news that continues to come out, check out our resource hub at sva.com/OBA. It's updated regularly with all sorts of information as things change. So please visit that. Eric, we got a couple of real interesting topics to cover today. Let's start off with the unrelated business taxable income. I know that's something you've been getting a lot of questions about. Can you talk to our listeners about what that is and how they should be thinking about it?
I sure can. I will say, Lee, this is probably a good time to quit smoking. For it's just not healthy for you, Lee.
I don't. That's not what I keep watching the Senate hearings from the 60s. They say it's fine.
Right? Yes, right. You should. Sure, it's actually good for you
Yes, exactly.
in regulation, right? In
Okay.
moderation.
All right. Fair enough.
All right. So UBTI, and actually, it's pronounced or what's that shorthand when you have the first letters
An
of a group
acronym.
of words? An acronym. Yeah. There's two acronyms for it. There's UBTI or there's UBIT. So you call it UBIT or UBTI. They both basically, it's referring to the same thing: unrelated business taxable income or unrelated business income tax. And what it refers to is an income tax that applies where you might not normally see an income tax. And where individuals see this most is when they have IRAs, so individual retirement accounts, or Roth IRAs that are invested in, we'll call them non traditional investments. So in your IRA account, you might have regular investments like stocks and bonds, and you're through a broker and you have mutual funds. Those are the kind of income that doesn't produce UBTI or UBIT. You never even see it. You didn't even know it exists. Where you know it exists is sometimes within those funds, you might invest in a partnership, or if you have a self directed IRA, you might invest in somebody's business. And the income that flows through might also then have this UBTI attached to it, where the reporting entity, the company you're invested in, says, hey, some of your investment could be subject to UBTI, which is subject to income tax, even though you're an IRA. So again, normally IRAs, Roth IRAs, all the income in there is tax free, right? It grows and grows and grows, and you don't report it on your income taxes until you start taking it out. And then the IRA is taxable when you start taking it out. Roth IRA is never taxable. So within those IRAs and Roth IRAs, that income grows tax free unless it's subject to these UBTI rules. The kind of income that's subject to UBTI rules is if they're investing in partnerships or debt financed real estate or other operating businesses. And so this is the government's way of saying, hey, if you're investing in operating businesses, then you have to get a share of UBTI from that operating business. And the IRA or Roth IRA, wherever the investment is housed, actually has to pay an income tax. So it's an exception to the normally tax free rules of IRAs and Roth IRAs where they have to pay an income tax on it. And you'll know when you invest that you have it because normally what would happen is if you're investing in something that would produce UBTI, the entity you're investing in should be able to tell you that right away. Stocks and bonds, no, it's not going to be there, but it could be in partnerships or operating businesses that you're investing in.
And so this UBTI or UBIT is only going to come through an IRA or other retirement account?
Yeah, it's normally in a retirement account. Now, it also applies to some not for profits. It could apply to a 401k. But I'm talking about where I see it most is individuals that have IRAs and they self-direct their IRAs and invest in all sorts of things, including stocks and bonds, which normal market stuff, but also invest in, say, partnerships that might be promoted by their broker, or they invest in partnerships like, say, a friend's partnership. Hey, I'm in the business of flipping houses, and we're going to have a partnership. And would you like to invest some money in it? That's the kind of thing that can produce UBTI. And
And yeah, I
if
was
it's
just
in those local ones, I guess I'd say the institutions always know, but your local buddy, if you're investing with him and he does let's say a flipping business, you can invest in real estate and flip it over. You're invested in that business and he gives you a return on that investment. That could certainly be subject to UBTI, and your buddy may not know that. So eventually it's going to come out, and then you're going to have to pay a tax on that.
and Eric, if so in this situation, if you are subject to UBTI or UBIT, what does that mean? Does that just increase your taxable income? Is that essentially what's happening?
Well, it's a tax actually on the IRA itself. So it's not reported on your individual return. So every year you do your individual return, you report all your income on there and send it to the IRS. This is a separate return that's filed from the IRA that says, hey, we've had some UBTI and here's our calculated tax on that. So it's a whole separate tax return.
Okay, a whole separate tax return. What are the costs around that? So if you end up with UBTI and need another tax return, is this a complicated form?
Yeah, it's not overly complicated, but it certainly adds to administrative costs. I mean, it could easily be $1,500 to do this kind of form. I think some fiduciaries might do it on your behalf if they have a tax preparation service within their fiduciary, like one of the brokerage houses might for less. But yeah, it does add to the cost. So if you're investing in something that produces that, you want to know the whole cost of that because that affects your return.
Yeah. Okay. Really interesting. Definitely something I didn't know anything about, but that's not really surprising to anybody now, is it? Well, that's great. So, thank you for doing that. Again, it sounds like you should know if you're investing in something that would potentially bring along some UBTI, but always talk to your professional
That's
to make
right.
sure.
Yeah, I guess I would say, yeah, there's something you want to ask if you're investing in a non-traditional investment within your IRA or Roth IRA is this going to produce UBTI?
Okay. Great. All right, Eric. Let's shift gears a little bit to well, maybe a little bit of a self-serving topic for us, but over the last couple of weeks, we've unveiled the results of our fourth and fifth annual um, salary and benefits survey for veterinary and dental practices. Now, majority of our listeners don't fall into those industries, but there was an interesting takeaway from one of those surveys that I know you wanted to talk about. And particularly, we asked the question of 66 veterinary practices in the state of Wisconsin. We asked them, what is the average hourly rate that you pay a bookkeeper? And what was
Right.
really interesting is the single biggest increase over last year was amongst bookkeepers. It was almost 13%. So I know you and I have talked about this before. Do you want to talk a little bit about some of the trends we see out there with bookkeepers and where you kind of see that going?
Yeah. What's happening within the industry is the way the accounting profession has shifted. um, the accounting profession used to produce a ton of bookkeepers, people that would get into the profession. Bookkeeping would be part of their job, and they might break off and hang a shingle and say, I'm a bookkeeper now. And because the accounting profession, when they brought people in, usually started them in like a bookkeeping role, the accounting profession just produced many of those into the marketplace. That just doesn't happen anymore. A lot of accounting profession firms get specialized real quick. Um, a lot of the work that would have otherwise been done by folks doing bookkeeping, there's so much automation that goes into it now. Bookkeepers used to do everything on paper, and it took a long time. And so a lot of hours were put into it, and a lot of people did it. Now a lot of it's being done by computers, and technology has shortcutted it. There just is not a lot of time that accounting firms are spending training bookkeepers. They don't have to anymore. What's happened, and this has been over the course of time, is that the people that would break off and hang a shingle, there's just less and less of them out there. And so what we've been seeing is that companies are having a hard time finding these single bookkeepers. And when they do, they're having a hard time keeping them. Either they're nearing retirement and they might be leaving, or they, find a job quickly elsewhere because there's raises to be had. So it's hard for companies to depend on bookkeepers like they could, even 10 years ago, certainly 20, 30 years ago. There's not as many. They can jump jobs. And, the plethora of ones that were out there, they're all getting near retirement now because that's when they were grown as, 20, 30, 40 years ago. So what's happening within the industry is we're seeing more inquiries, our firm is, and I'm assuming other firms are as well, of help me find a bookkeeping solution. I cannot find a person anymore. I don't know that I want to deal with having a person anymore. I just want a company to do this for me. So one of the places that companies are looking is they're looking outside of what was a traditional bookkeeping role and saying, I'm just going to turn this stuff over to my accounting firm. Do they have a bookkeeping department that can do it? And by the way, these bookkeeping departments, they're not staffed with all bookkeepers anymore. There's a lot of technology that's going into this to make it an efficient process. So that's what's been happening. Or some of them are finding overseas, which I think is a bit tricky just because there's I guess I'd call it a data security issue you've always got to deal with when you're sending data over, and whose computer those folks overseas are using and what access to data that they have. Um, but they're looking essentially for alternatives because those bookkeepers that used to be there in the past just aren't there anymore. They're getting more expensive, and so they're looking for these other solutions.
Yeah, and you and I talked about this too. I mean, I see this in my role. Like pretty much every industry we're in, there's been a huge increase in this. And you're right, it's hard to keep them, it's hard to find them. But also, depending on the size of your organization, there may not be a great career path for them. So
Right.
it makes sense, and it's really hard, especially when we're talking to small business owners. It's really hard to put the pressure on them to have to train the next bookkeeper because most of our clients, those business owners, they're not accountants by trade. So now they're trying to train somebody else. It's just, it's a process that hasn't been working great for a lot of people recently. And there's no doubt we're seeing a lot of changes. Again, super self-serving um, because we do offer these services, but it's also very legitimate and out there and something that we need to talk about.
Yeah, and I think what you're looking for, if you look for services on this and say, hey, maybe I want to explore this, you want to find a company that's integrating technology into their bookkeeping solution because that's the way it's going right now. And so you're not looking for, hey, do you have a staff of bookkeepers that, to make sure I can do this? You're really looking for, okay, how are you going to utilize technology to help me out, be efficient here, and get my bookkeeping done on a regular basis? So you're looking for firms that are up on technology and that can use things to, integrate data from systems that they might be that the company may have, that your company may have, into an accounting system.
Absolutely. Okay, great. Well, good. Let's move on to our mailbag. So you can send questions you have to bizbeat@sva.com or submit it on our website at sva.com/bizbeat. So this week's question, Eric, If I own a property and receive prepaid rent, do I have to claim it in the year it's received?
Yeah, so this is a good question. And I get this question towards the end of the year, usually from clients that are landlords that hold property. And sometimes their tenants want to pay up front. Sometimes it's a business tenant and they want to get a tax deduction to say, well, one of the ways I'm going to get a tax deduction is I'm going to pay some of next year's expenses. So I'm going to throw some rent out to my landlord. Um, as a landlord, when you receive rent, it is taxable in the year you receive it, even if you're on an accrual basis. So there's two ways typically you can do your accounting. You can do your accounting on a cash basis, which typically means I collect, or when I collect cash, that's when I pay tax. Or an accrual basis. An accrual basis means when I earn it, that's when I record the income. So in rent income situations, you earn the rent by just having the space available over time. So a month's rent is earned by simply a month passing with your tenant being in there. That's when you earn it. Um, However, for rent, there are special tax rules that say you don't get to claim the rent income when you earn it if you receive it up front. So if someone pays you cash up front in December in 2025 for 2026 rent, that's actually taxable income in December. So know that if your tenant's trying to squeeze a deduction through and say, hey, I'm going to pay some rent early, as a landlord, you don't necessarily want that check early if you didn't plan on paying tax on it, because when you get that check, it is going to be taxable income. If you receive it in 2025, even though it's for 2026 rent time periods, it's going to be taxable income in 2025.
So how do you do that as a landlord? When you get that check from your tenant and you don't want it, you've got to talk to them, or you just put it in the drawer until January 1st and don't cash it yet?
That would be illegal. You can't do
Ah, okay,
that.
fair enough.
Now, if it's going to a lockbox that you don't have access to and you're out of town or celebrating the holidays and don't have a regular access to it, it might end up in a lockbox that you do not get access to until after the end of the year. And that happens, especially because of the holidays. So it could be that your access to that rent check, even though the tenant mailed it in 2025, you really don't get possession of it until 2026. So that does happen.
Okay, but essentially, it's you should be working with your tenants to, if this is something they want to do, so they're not
Yeah.
just that's not sitting on your desk on December 23rd and now you're
Right.
stuck. Okay. Well, that's really interesting. Again, surprise, surprise, another thing I didn't know or hear of. Um,
You're
okay,
going to be a
well,
tax accountant by the time we're done with this series,
I
Lee.
I don't. It's been 14 years, Eric. I don't think it's ever going to happen. All right.
Well,
Well,
maybe I'll be a salesman by the time this is
there
over. I
you
don't
go.
know.
That is much more likely. All right. Well, that wraps up this week's episode of the Biz Beat by SVA. If you found this week's episode helpful, please subscribe on Apple Podcasts, Spotify, or on YouTube. Again, check out sva.com/OBA for all the recent news and dated news about the One Big Beautiful Bill. And as always, remember what we share here is just general guidance. For advice specific to your situation, talk with your CPA or advisor. And whether it's tax planning, which you should be doing now, or it's uh, outsourcing your bookkeeping and accounting, please reach out to us if you have any questions or want some help. We'd love to have that conversation. Thanks for tuning in, and we will look forward to talking to you next week on the Biz Beat by SVA.
It's the Biz Beat by SVA, breaking down the news of the day. From tax tips to business trends, smart insights from trusted friends. The Biz Beat by SVA.